Missiles fire between Iran and Israel. Markets are getting caught in the crossfire. Here's your fast market update so you know exactly what to do with your finances. What's happening? Well, first of all, you've seen a surge in the price of oil. It's up 5%. It doesn't affect just the oil price though. That of course causes inflation potentially to rise. You also see a rise in commodities and gold and other things. That's called a flight to safety. So typically when you get this major situation, this major impact occur because of war, then you see over the next month a market drop of on average 8%. It was 2% yesterday. Could it fall further? Well, on average it has done historically as tensions potentially continue to rise. What happens? Well, in the longer term it depends whether it triggers a recession. If there's no recession, on average the markets are up 9% just 12 months later. So you can get things sorted quickly and markets can actually recover. If it causes a recession, in other words, inflation goes up and we trigger an economy or a downturn in the global economy, then we actually see a market fall of around 15%. So what are investors doing? Well, it's this flight to safety. You see it right now with gold prices and Bitcoin prices going up yesterday. You see it that people are buying government bonds. And in fact, although the yield has gone down, people are moving to fixed interest. Of course, you can do that. We always say as investors or advisors to make sure that you diversify your investment. For me, I actually think there's going to be opportunities. In other words, whatever happens in the market, when there's dramatic events, particularly ones like this, you do get volatility. Volatility produces emotion, and people that can remain calm and can invest in the right things and the right structures actually can gain good returns despite the turmoil. So when you're investing your money, seek advice, stay calm. Don't just cash in and come out of the markets for the sake of it, because you'll often see that people come out of the markets exactly the wrong time. So yes, everybody's concerned about what's happening in the Middle East and does it expand further. But nevertheless, it's always sensible to be diversified, to have some money invested across various different asset classes. So that means you would have some in gold, you would have some in stock, you would have some in fixed interest, you would have some in property, and you have a good fund manager to make sure that diversification occurs. Right now, don't panic. Yes, you're going to get volatility, but there's actually going to be companies, good companies, that in the medium term are going to be making money, and you can buy that stock actually less expensively when markets fall. That's your market update from me, Nigel, CEO of De Beer.